Today's market call is presented by CME Group, where risk meets opportunity, and FactSet, financial data and analytics powered by tomorrow.
Hi, it's Market Call. I'm Dan Nathan. That's Carter Worth. Carter,
what's going on?
Welcome to the Market Call. This is something interesting. Carter Worth without a collar. The last time I saw collar without you, without even, that sort of thing. I'm loving it. We appreciate you being here for the full time. Guy Adami is on his way to Wilmington. Some might say, well, Wilmington, Delaware, Wilmington, North Carolina. And I asked him this morning, I said, did you book the right Wilmington? You know what I mean? He said he did.
That could get dodgy.
So that could get a little dodgy. Carter, we got a holiday, some of the folks here, we got an email in the email box here. I just got to pull this up because this is something maybe you could shed a little light on for us as a longtime market participant. This is Mark. Mark is saying it's called Sell Rosh Hashanah, Buy Yom Kippur. New moon this past Sunday. Autumnal equinox. Now, the Jewish holiday, as I'm sure you will know, it's tied to planetary and lunar cycles for thousands of years. Wall Street and financial press only think the earnings forecast, the Fed, etc. Control the markets. I've only been doing technical and cyclical analysis for 45 years, but stand on the shoulders of giants like the real great rabbis. All right, speak to me. You're not a rabbi, but you're kind of the rabbi of technical analysis.
Yeah, I mean, let's see, cycle work, and there are people who tie their work to astrology and to long cycles and things to the Farmer's Almanac. And I'm not saying anything to make fun. There are, sometimes some people biblical feast and famine, 7 years of good times, 7 years, so forth. That is not in principle what classic charting is. I study the price action individual stocks and pay a lot of attention to volume and trying to determine the way forward when buying and selling risk assets. But listen, to each his own. There's an also expression. There are many ways to get to heaven.
Yeah, so, that is true. If you believe
all
in such
good for Mark or anyone else. There's another expression. God bless.
Well, thanks for the contribution there, Mark. And someday I will learn how to say the word autumnal. I think I just did it there. How about that? Yes. It is a Rosh Hashanah miracle. Well, thanks for that. You and I, we got a lot of stuff to do today. Okay. I want to hit the markets. I want to hit your note. We highlighted it yesterday on the Russell 2000, the IWM that tracks the index. Guy and I made a trade on that. We showed your arrows. One goes up, one goes down. You did not make any judgments one way or another, but it was an interesting sort of setup. One of the more interesting setups in one of the major indices in a while. You've also been showing us on the Market Call on Fast Money, the RSP, the equal weight S&P, right? Which is also in the Dow, which hadn't, made new highs. So maybe we'll take a quick look at those. We also, you're bringing us some charts on software. Morgan Stanley downgraded Adobe, upgraded ServiceNow. They're making a distinction between these different software names. And I think there's some interesting setups there. And then I gotta hit you about Oracle, man. This one seems to me just so in the zeitgeist of everything that's going on in and around this AI trade. It wasn't part of it until about 9 months ago. Now it seems like every sort of kind of facet of this trade is worked itself into the Oracle ecosystem, and I'm not sure they're ready for it. Let's quickly just hit the S&P 500. Let's look at the futures here and just kind of get a sense, Carter. We've had, we've seen just the volatility kind of die, in the last couple of weeks or so. We see a VIX that's trading about 663, which actually has moved higher as the vol has kind of moved lower. So maybe that's something sort of technical. Where are you right now? Man, it's just kind of bringing up this S&P futures chart. You see that one-day gap that we had, I want to say about a week and a half ago, and it just seems like it's kind of levitating here. Thoughts on what you're seeing in the S&P futures?
Yeah, it's just come a long way without any pause would be a gentle word. A setback would be a more sort of word with implications. But we know that it speaks to, one, the vagaries of risk assets. How is it possible that the S&P 500 loses 21% of the value that's ever created since the 1920s in a matter of weeks because of a tariff kerfuffle, a little dust up, and then not only recoups all those losses, goes on and makes meaningful new highs. It's ever thus. But what we do know is a lot of money has been pushed into the market since the April 7th plunge low associated with tariffs. And we're also not just weeks off that or months, we're getting into 6 months away from that move without any real trouble. So in principle, if this were an individual stock, and one of course can trade it, you could buy the SPY. Is this something that one would anticipate gets even steeper? Or is it something one would anticipate has the risk that it pauses or gives back? I would be in that camp. And again, it's always on the increment. If you're long, you trim a little, or you hedge, you put on a risk reversal or something like that.
Well, Carter, is there a number in your mind that when you get X% above your 150-day moving average, that you start to get your antennas up? I mean, you can see this. The 150-day is kind of, it's trending up a little bit, but it was basically flatlining a few weeks ago.
Yeah, we're 10% above. Remember, for a stock, it's beta adjusted, right? For a slow-moving consumer staples, groceries business, you're never going to spike that far above. Whereas if it's something very dynamic and small cap, so the percentage above your moving average is adjusted, right, for beta and the type of business and so forth. But again, 10% for an index. If you did this on a 5-year basis, we can't get that for the continuous. So you've got the continuous here. So there, I mean, just eyeballing it, you're getting to a point where this is where some sort of setback becomes increasingly likely. And setbacks aren't bad. They're good. They reset the table.
Yeah. So Amanda just went to a 10-year, and let's pull that back up a second. That's a 10-year S&P futures. And do you call this an internal trend line? Let's make a line from that high.
Yeah, we've moved above that, right? We spent a lot of time on that. So
talk to us a little bit about that. Okay, the importance of that, and why is it internal, not external? I know that sounds
well. Yeah, so you're measuring trend. There is no. I mean, in principle, just because you can connect tops, that's not the trend. The trend is like anything from below, whether it's your weight or your NFL stats or the price of a stock, and you go above or below trend. Just connecting tops, it's an internal trend line. It's more for a long-term look at where something is in relation to where it's been. But again, precious few touch points. And if you looked at the all data internal trend line, we moved above that since 1920s. So it's pretty aggressive here. Again, it gets down to this: are you buying or selling, right? I suppose, unless you're doing nothing. And I think this is a time where one on the increment would want to be doing de-risking, reducing exposure, that kind of thing, rather than increasing exposure.
One last question. So if we did a 20-year going back to 2005 and we made it a log chart, right? So you would use a log for that sort of time.
You have to.
Yep. All right. So then let's make that a log, Amanda. And then, there are 3 points, man. I mean, like if you
connect the 2000 top, that would be the one, right? That we
from 2000. Okay.
Yeah, we published on that. You've seen that, but it's the .com, and you'll see. But you can connect the 2007 peak because that's the peak in the market from. But anyway, it's
no, we get it. I just wanted to highlight
we've come a long way.
and it's now just kind of picking its head up a little bit above that internal trend line. Okay, let's go to the Russell really quickly, because this is one that had been lagging the major indices. We've been talking about it for almost 2 years, maybe a little longer. Some of the dynamics that are in play right now with rate cuts and expected growth that's maybe higher than expected. Also, when we're talking about tariffs and the ability who's kind of eating the costs and all that sort of stuff. So it seems like for whatever reason, people put together a narrative that they have played catch up in the Russell 2000. Do we have those charts from yesterday, guys, really quickly? So you know what? You laid it out. There was 3 points here. You had the up arrow, you had the down arrow. Guy and I were looking at this and we were pointing lower. And, you know, the vol that we were looking at in the options for long premium directional looked kind of attractive to us. And so when you look at this, let's just pull up the IWM Alive chart here. You know, for us and the way we were like thinking about it, Carter, you know, it just the levels lined up pretty good as far as how we're seeing the market, you know, kind of the way it's supposedly broadened out or something like that. So we were looking for a move, you know, back towards that. I'll just show you that kind of big up day right there that you saw, you know, I don't know, late August right there. You know what I mean? Like kind of playing for a move back towards that. Does that make sense to you? If you're just, we're telling you what we're looking at. We're not asking you to make a judgment.
Yeah. So the point of the report was to really make the point of how poor the relative performance has been, right? If you've finally gone back to where you were 4 years ago, which is what the Russell 2000 has done, it means, of course, you're unchanged for 4 years. So in the autumn of 2021, and here we are in the autumn of 2025. Now, if you're unchanged and the S&P is up a whole bunch, that's the definition of poor relative performance. In fact, the Russell 2000 has been underperforming since its inception in 1984. The notion that small cap stocks outperform is just not proved. And so the question here now is, this is a time I would say to bet against volatility, right? After a spike like that, right back to a former high, steep and uncorrected, you're likely to back and fill. And again, I would anticipate neither a breakout in a meaningful way or massive failure here and triple top. So I think what's likely is a lot of backing and filling and sort of low volatility ahead, at least 3, 4, 5 weeks.
Yeah. And you know, just the levels here, we picked the 245, 225. You want to go to a 1 year just for a second here. That was a put spread in November and, you know, very near the money. We kind of caught it at the right time yesterday when it was up making new highs here, but that's that kind of 225 level that we were kind of highlighting, which was a breakout level. So that is that. Let's pull up the gold futures for a second here, guys. And, you know, this is one, Carter, that I know you've been bullish of, Guy's been bullish of. Obviously, you're looking at it from a technical perspective. Guy is very much from a fundamental perspective. It's got a series. Go to the 5 year for a second. You know, we see these moves higher. We see the consolidations. We see the breakouts, that sort of thing. This thing, you might say, steep, uncorrected. Where are you right now? Because just I keep hearing, you know, okay, the stock market's going higher, the dollar's been going lower, you know, yields are kind of stuck. That's been your, you know, kind of call there as far as 10-year, that sort of thing. But the gold keeps going up, you know, in a way that is just, I don't know, kind of unabated. What do you do here now that there's so many calls for people to own gold here?
Yeah, you know, it's the equal and opposite moment of gold being ridiculed just 2, 3 years ago. You can look at the Dow gold ratio, which goes back, of course, forever, going back 100 plus years. I mean, there are periods where it's precious metals are the more desirable thing than risk assets in the form of stocks, and then vice versa. But what's really steep and uncorrected are the gold miners, right? Those are, and rightly so, you get the operating leverage out of a business that you don't out of the commodity. But the XAU or the GDX, I think you trim this pretty meaningfully. Sell calls, do something. It's just about as far above trend as you're going to get without some sort of give back. And remember, it doesn't just start going down on its own. Someone says, hey, maybe I should take some profits here. Another person decides to do that. A few more do that. Then someone says, I could short this, maybe catch it to 71, make $2. That selling pressure associated with prospective profit taking and or new shorting at some point halts the advance and turns the stock, or in this case, the ETF, down. I would be doing that kind of thing in anticipation of that kind of thing.
Yeah, and so I'm just going to look out to November expiration in the GDX here, and I'm looking at the 73 put. Okay, so that's basically the at the money. They're offering about $4. I mean, that is, so if you're paying, you know, $4 for a 73 put, you need to move down to 69 just to break even. You could say, well, is there 4 trading days ago? I'm just saying that's a pretty tough way to make some money. But if you were looking at the 73, let's say, the 73 put, let's call it at $4, and then you said the 63. So the 73, 63, it's not great. It's like $3.50, but that's $10 wide. It's just a tough way to play it with options. Let's go back to the gold for a second, and that's one of the reasons why I think futures are sort of interesting as we're thinking about the gold. Just as you've gotten this really, I think. I don't want to call it irrational exuberance. There's plenty of folks that, feel like there's plenty of fundamental reasons. And then from a technical, standpoint, I mean, Guy's view was like, once this thing breaks out, it's going to continue to go. But if you were to kind of sell this thing here, Carter, it's like, let's call it 37.55. I mean, that first stop would be 3,600-ish at the, you see that consolidation before it just had that leg a few trading days ago. Or how tight would you be thinking about this? Because we know yesterday was an all-time high, right? So we got to 3,800. If you were trading the futures, and I know you have traded futures in the past, and you and I've talked about, I think with major indices, I don't know if you've been doing it lately, but where would your first attempt, let's say you're going to stop this at 3,800, right above that prior high from yesterday. What would your initial target be?
Yeah, 36 seems fair. What you said, 36.50.
Yeah.
I mean, what's really steep incredibly, because it's a catch-up trade that's now catching up, is silver.
Yeah.
Right. So silver is increasingly uncorrected, and that too would be one too if one's considering betting against this general move to go after.
Okay. Appreciate that. One last one. Let's pull up crude here because, this is, it's just been kind of stuck. I know that there's a lot of folks who are making the argument for energy stocks, from a fundamental standpoint, but I'm sure you're not particularly excited about the OAH or the XLE either. There's just nothing to do here. You see that declining 150-day. It's right kind of repelled the crude over the last, couple months or so at those levels. Anything to do here in crude?
Yeah, crude's a pair of twos, but I like the oil services. I mean, they're ones that have acted very well, Apache being one, or even the OAH has turned, and so I would, Schlumberger is the laggard, but this is money good. I would think higher.
Okay, and not XLE here?
XLE is more of a pair of twos. Again, that's really Chevron and Exxon. We can pull it up, but it doesn't have the torque and the beta that this other has, and it's not so much a catch-up trade as it is a yield trade. To my eye, but both, let me say this, look as though they have little downside risk here.
Okay, I like that. That's interesting, especially as we get into year end. I think a lot of folks, we were tracking John Butter's work yesterday. He had his earnings insight blog out early for us, and expectations for earnings growth in the energy space is much higher than that in the rest of the names that have actually been doing a lot of heavy lifting. So there's a scenario where expectations aren't particularly low, but if they start kind of coming in line with that, then that might be the reason to kind of, kind of load up back towards those prior highs that we're getting to. I think that was like late November or something like that. Last one here, as we think about the macro, let's pull up Bitcoin for a second. So we just talked about gold, right? And we talked about the weakness in the dollar, and, gold is, for whatever reason, it's going higher. Maybe it's the dollar weakness, who knows, right? But are you surprised at how Bitcoin acts here? I've been talking about this for a little bit. It's like, if you think about, pull this out to a 5-year for a second. So, there was a lot of excitement last year into the formation of a lot of these ETFs, right? And then as the Trump administration or the Trump campaign started talking about, regulation, and I know you can call it regulation, but for all intents and purposes, it was deregulation, you know what I mean? But some guardrails around that. So you saw this big rally in the fall of last year. Then you saw the excitement in around stable coins and meme coins that were associated with a whole host of different things, right? And then the treasury, these like treasury securities like MicroStrategy, they started, really expanding. We saw more and more dozens, if not hundreds now, of situations where they're basically issuing debt, equity, anything they can to buy the underlying. But now let's go to a 1 year for a second. It seems like all of those I guess you call them catalysts, they've kind of all chilled out a little bit. So I'm just curious, how are you thinking about Bitcoin? And are there any levels from the support side? I see your 150-day moving average is about 100,000 to the downside. We know that was 125 or something to the upside. Does that sound right?
Yeah, I mean, it's sort of benign uptrend, right? It's not felt like exciting, and yet it doesn't seem to have any downside risk. This is generally in the pair of twos category with a bias to the upside. Would be my take on it, and Ethereum too.
Okay. And Ethereum's definitely outperformed of late. All right, let's look at some software names. And this was just interesting. It kind of caught my eye because Morgan Stanley downgraded Adobe, and I think they upgraded Morgan Stanley. And Adobe and Salesforce. Let's just kind of pull Salesforce up for a second, because this is one that we've been talking about for a while. This is a company that's been trying to tell a generative AI story. One of the first use cases for generative AI was meant to be like customer service and the like. And this company that's Salesforce, the CRM is the ticker there. It's like customer relations management, or whatever the hell it is. You would have thought that these guys were going to be some of the ones that were able to figure it out. So you see this, it's massively underperformed the NASDAQ and many of its software peers. And let's pull up Adobe, and both these companies reported in the last month. And for the most part, just kind of disappointing. Their inability to kind of tell a story about how they're going to be using, generative AI, not just internally, but also to be able to upsell existing customers here. So let's talk a little bit about the weakness in these two first, if you don't mind.
Yeah, that's just what it is. Just as you said, I mean, to imagine to be a marquee, that's what it is, a marquee, prominent, large cap technology business, information technology, and to have your stock acting like this when everyone else is up and to the right. And so it's the fascinating thing. There's wisdom in price. People are not buying it because if enough people buy it, more so than they're selling it, it goes up. Where are the buyers? So a collective judgment is being made in the marketplace that this doesn't have good prospects on an intermediate basis and prospectively on a long-term basis. And so one can either fight that and say, but I think it's cheap, or I think there's an opportunity here, or one can respect it. And I'm always in the camp to respect price. And so stay away. I wouldn't do it.
Okay. Appreciate that. And then Salesforce falls into the same category.
Yeah.
Okay. And listen, we're at a point where, and we have Carter's charts. Let's just kind of pull that up for a second, because these might be more helpful than what we're doing here.
The lines are arbitrary to some extent. It's just that the point is, this is sitting here like this, what a year.
Yeah.
You like, it's like any athlete or actor. You're like, that movie bombed. Oh, well, I mean, I fumbled 3 times. You're like, what's going on here? Well, and since I don't know what they do, but the price action's terrible, and I would resist any temptation to buy it.
Okay. And then let's look at the ServiceNow, because I think this is, when we think about some of these SaaS names, and again, Salesforce falls into that same category, but it seems like they're, the trajectory of a lot of those triangles that you're drawing here, are not triangles, but those wedges, they're looking a little different in ServiceNow.
Yeah, this is certainly better, but this is a pair of twos. The other one I would sell and just get out if you had it and move on. This still has the possibility that this standoff gets resolved to the upside. I'd put it in the pair of twos category and wouldn't trade it for now. And I'd wait for more information, which is to say more price action to inform the next decision.
All right. Help me inform a decision that I'm making in Oracle about trying to play for a gap fill here. And I know you don't give a shit about one of the reasons and why the stock has been pretty volatile over the last 2 weeks since that huge gap. I mean, it is what it is. I mean, one of the things that I find really interesting is that gap had to do with increased guidance that they gave because of a huge contract that they're going to get from OpenAI, to build out basically data center compute, whatever you want to call it, because OpenAI is growing like crazy. They want to do everything. They want to take over the world. It's AGI. It's super intelligence. They're going to make hardware. They're going to do everything, right? And it's interesting to me because they guided for $300 billion in revenue over the next 5 years, but they don't even have the infrastructure built to kind of offer that sort of service to the company. Now, obviously, that's over the next 5 years, but it's worth noting, Carter, that Microsoft, Google, Meta, and maybe a couple others, they're spending 25% of their revenue, to build out these data centers. All right. Half of that is NVIDIA chips. All right. So for whatever that's So if you think about Oracle, and you think about their revenue base, it's much smaller. They have a ton of debt. The hyperscalers are funding that build out through their cash and cash flow, you know what I mean, that they're generating at massive levels, right? So Oracle, on the flip side, they have been spending, I think last year they spent, or in the trailing 12 months, they spent $25 billion. They guided to $35 billion. And it's just not enough. I mean, so they're talking about doing a big debt deal, maybe $15 billion, but this is a company last year that did $55 billion. So if they were going to be doing $30 billion, $55 billion in revenue, if they're going to do 30% of that, it's still not particularly great, right? Like as far as their ability to do this. And now you're in a situation where NVIDIA is investing in OpenAI, it's just like this really interesting sort of scenario where we don't even know where who's doing what where. It just seems like they're pushing a lot of money around just to move their product around. So talk to me a little bit about this Oracle. I am just so skeptical that they're basically going to be able to realize the sort of revenue that they've already guided to.
Yeah, you have the initial earnings related gap in June breaking out from the range, and you have a second earnings related gap here just 1 month ago, 3 weeks anyway. And what's likely is a lot of backing and filling, and you're seeing that now. It would take a lot for that gap to be filled, and I would say that's not likely in a reasonable time frame. If one says, well, I think in 3 years, okay, it's idiotic, right? 3 years. I mean, so the question is, could one play forward? I mean, you would need a market event. I think,
yeah.
Right. There's nothing that would come along to unwind that strength day to day, week to week, if you know what I mean.
Yeah. So let me tell you the trade that I did yesterday. I did a 300, 250, 200 put butterfly. So I bought one of the 300s, I sold two of the 250s, and I bought one of the way downside 200s. Okay. So I set up this very symmetrical sort of trade. And so my break even to the downside, I think, let me just kind of look at what I paid for this yesterday. It was just like, I really like the risk reward here. And so it was, just give me a second here. Yeah, I paid a little less than $10 for that. So my break even was 290 to the downside of November expiration. So if you think about where the stock is right now, and then that 290 level was kind of the low of this range, you know what I mean, that's been in for the last week and a half or so. So 250 or so was that sort of most of the gap fill. And I get it. But what I was trying to do is, like, if I get into, by November expiration, if I'm trading, if I filled in a part of that gap, 270, 275 or something like that, that's gonna be a good trade. You know what I mean? Like, I'll make 2 to 1 or something like that. So, and if we do have a market event and it goes back towards that 260 level or something like that, it's gonna be a very good trade.
Yeah. And then it would, and then look, you have a seasonally, September has turned out to be a very decent month, but October is also a seasonal month where there can and has been trouble. I think it's smart that you've gone out, to November and even further if one's looking to sort of catch a downdraft, right?
Yep. No, that was the take here. Just a couple questions here really quickly, and I'm going to try to tee you up. The Situation Room was asking where you are on Bitcoin. I think you gave us a sense is that you're not overly geeked up about it, but you'd kind of lean to the long side, right? So that was that. I just wanted to kind of redo that. Here's one. Is crack, the CRAK, is that the Cracker Barrel? Is that what we're doing there? No, that's the Van Eck oils. This is fun taking things on. Pull up the crack for a second. This is Wavy McFly asking. Question for Carter. Crack looks like a big base breakout. What do you see? Do you see that?
I mean, it's a little steep day to day, right? To be fair, I mean, you move from 24 to 30, 37 and change. So the question is this, like the market, like so many things from the April low, the April reference point, the plunge low associated with tariff news, is this due? That's a highly imprecise word, or at risk for some sort of give back, $1, or 5. Meaning, I would say yes. So if one wants to have their cake and eat it too, that's what selling calls is. You stay long and sell some calls, or if you really want to sort of de-risk, you do the risk reversal. It costs you some money, but at least it solves the problem of something really unhappy happening. while acknowledging that, hey, could it tick higher? It can. It could be 39, meaning this is all part of the nuances of figuring out. So at a minimum, if one's long, I would sell calls.
All right, here's one, and I want to get your sense because some of these names in the space, or a couple of these spaces, deemed to be defensive. I'm wondering if they're kind of piquing your interest a little bit. This is from Jay Luther. Curious what Carter would say is a good dividend stock with upside potential in price for the next year. Is there an area of the market? Is it staples? Is it telcos? Is it utilities that you're like find interesting right here?
Yeah, I mean, it's ever this high yielding stocks, very high yielding stocks are associated with prospective trouble, right? That's why high yield bonds and junk and so forth. There is a stock. Some people think they're going out of business, but they don't have a lot of. Look at Western Union. Now, this is almost an 11% dividend yield. This is breaking all the rules. This is a stock that's in an established downtrend. You could put a 5-year chart for fun. But they pay out $1 in earnings, pay out $1 in dividend, a little less, about 97 cents. And so you get about a 10.5% yield. And the dividend is covered. They earn about $1.70. And so they've never cut their dividend. And the question is this going out of business as people use technology to transfer money versus going in and wiring it, I guess, is what they do at Western. I don't really know, but everyone knows what Western Union is. So we shall see, but I don't suspect they are going out of business, and that's a heck of a yield that is well covered. The dividend coverage ratio is decent.
So here's a dumb scenario. So a company like Western Union, right? So it's got this tiny market cap. I think it's got like $2.5 billion equity market cap. Let's see. I'm just going to pull it up for a second here. And they have, $2.6 billion in market cap, $1 billion in cash, and they have $2.8 billion in debt. You just mentioned $1.07 in earnings. They're paying out 97 or $1.70
in earnings. They pay out at 97 cents.
So this is trading at 4.5 times earnings. Earnings growth is expected to be like low single digits. Revenue growth is basically flat. And so
it's a bond. If they don't go to business, it's a bond.
Yeah. Right. So here's the deal. I mean, this is a 38% gross margin company. If I were these guys, I'd like literally turn myself into a treasury company. I'm being serious. I would like issue a stable coin and like, do all that sort of stuff because you want this thing, you want 11% short interest. You know what I mean? Like, I know that I'm just being goofy, like stock market goofy here, but you're feeling me a little bit. Like that there's stuff there like that you could see in this sort of market people could do. All right, here's Fernando Ortegon. Can we ask Carter about the outlook for Boeing with the incoming orders? Now, this was really interesting, Carter. So I know you live in the Upper East Side. I know that you're probably not particularly happy about the traffic this week. We have the UN General Assembly. Every year, the third week in September, traffic is an absolute disaster, Midtown and Upper East and all that sort of stuff, where you have over 100 countries, like leaders come and their big delegations and this and that, whatever. But a big part of this was like all these countries kowtowing. They want to buy Boeing planes, okay? You would have thought maybe the stock would have acted a little better here in the lead up. If anything, it sold off a little bit. Thoughts on Boeing here, and then they could pull it out to a 5-year or two for a second.
Well, it's such a big move off of it's again, every stock has the same low almost to the day, to the penny, April 7th. And to think that Boeing is almost doubled from that low, right? That was around 130 and it hit 240. And so this pullback is perfectly normal in the context of the preceding extraordinary move. I'd nibble here, do my take, small ads.
Okay. Helpful. Anything, Carter, you want to leave our listener, our viewer with here? We've had a lot of churn in the Mag 7, Fateful 8, whatever you want to call it. Oh, let's do this. This is what I'd love for you to leave our viewer with. Tesla. Okay, so even on a day like today, we're seeing a lot of churn in tech. We're seeing semis act pretty okay here. Tesla's up 3%. And, it's been my view going back 2 weeks now that the sentiment was really bad, that as far as deliveries and where consensus was, I know these are things that you don't give a shit. Well, you care about sentiment, but you don't care about like deliveries. A like. So next week, it's either going to be probably Wednesday, October 1st, or Thursday, the 2nd. The company is going to release, as they do every quarter, their quarterly deliveries of cars. Okay. So every year, deliveries have been down. Last quarter, they were down like 9%. Even if they hit the consensus number or a little better, they're going to be down high single digits year over year. Okay. So consensus, in my opinion, was very low. One of the main reasons is that $7,500 tax credit is going away on September 30th. So they might have saw a bit of a pull forward. The stock has moved. People are really focused on Robotaxi and Optimus, but it is interesting, in my opinion, one of the reasons for this rally has had to do with the car, the EV business, which is something that most of the bulls are saying, listen, we get it, but it's all about this stuff going forward. Thoughts here, because that prior high is something that I didn't think they were going to get to for a very long time, but I was also in the camp that I thought we were going to break out of this little wedge that we've been in, or whatever you want to call it. What do you do with the stock here?
Yeah, it's the resolution of the wedge, triangle, whatever you want to call it, has come and gone, right? And that's in fact, we did a poll there at 320, and 60% leaned bullish for the resolution to the upside. Indeed, that's come and gone. And now the question is this discounting whatever vehicle news is coming? Yes, next week or whatever. And I would say yes. So here too, I would reduce or sell calls.
Okay. Appreciate it. And just one of the things, again, is like, okay, if you thought, so right now the delivery estimate's like 432,000. Let's just say they come in at 450 and it's below some of the highest, expectations right now. Like your point would be, or my point would be, that you're likely to see a sell the news sort of thing. And what would you say a pullback would be? Let's just go to that May high. Is that something like in the tune of 360 or something like that? Or what?
Yeah, that seems a little far. I would think more like sort of 3. You think to undo the entire move would invalidate the entire move or call the whole thing into question. And the stock has moved in principle in response to prospective, whatever, vehicle sales that are better or what have you. I would think anything at 390 or better would be a sort of a viable dip.
Okay. All right. Appreciate that. All right, so we're going to leave our folks with Carter. I know that you and I were interesting. When we were at Robinhood, I think that was September 9th or so. We looked at the chart there. You kind of said at the time, it's just grinding, it's going sideways. I was in the same camp, but I was starting to come around to some of the fundamental stuff. How I was thinking that for someone who's generally a pessimist about Tesla, I was starting to think about just what would the next driver be, one way or the other. And I was thinking about, the end of the month and what was going to happen. And so to me, leaning on that kind of technical, prior high, that was, I think, that level you're talking about, 360 or something like that, 365. I was like, that thing could start to rock and roll a little bit. And that's what it did. But I'm happy to hear your perspective, because I know you also thought, despite the poll, the stock could break out, and it did.
Yeah. And the poll was positive, 60%. Yeah.
All right, my man. I really appreciate you being here. Thanks so much, Carter. We will see you guys tomorrow on Thursday. Liz Young is going to be with me. Liz Young Thomas. Thanks, Carter.